Thank you. Good to see you again, Matt. Tom Peregoodoff, Apollo Silver Corp, advancing our Calico Silver Project.
You are. I've seen the headlines. 110 million ounces of silver measured and indicated. Is that any good?
Well, let me try and put that into some context for yourself and some of the viewers, Matt. Think about it in gold terms, all right? You know, you're looking at 100 million ounces. A million ounces. Geez, 100. You're looking at 1 million ounces of gold, roughly in measured. And, you know, measured is the highest resource confidence you've got. I mean, this thing, you know, is from a resource perspective, shovel ready. When you look at it from a pure silver play perspective, there's not a lot of pure silver plays out there, which makes us, I think that's one of our competitive advantages. But, you know, if you think about things like Rochester, for example, which is Coeur's silver operation in Nevada, you know, those guys are, their resource statement, their grades are running sort of 30 to 40 gram per ton. Our measured grade is over 103 grams per ton. So, you know, from a grade perspective, very strong outcome. I think from a contained metal perspective, very strong outcome.
Okay, but again, okay, you're saying that's a good grade, right? But it still kind of feels at the lower end of, you know, silver grades that we could see plastered around the place. So, you know, what degree of confidence should we have over your ability to actually mine it economically?
Sure. You know, look, Matt, it comes down, you know, as we all know, mining really boils down to technical risk and overcoming that technical risk. And what we've got going for us at Waterloo and Calico more broadly is very, very low technical risk. When you look at some of those very spectacular high-grade silver-type operations, they are almost always underground, structurally controlled. They require a lot of capital to do a lot of drilling in front of you to keep the mill fed, if you will. This is a bulk mineable, low strip ratio, 1-to-1 strip ratio type operation in a tier 1 country. Very low risk, you know, investment risk type country. So I think that's what also investors need to understand. You got to make sure you're comparing apples and apples. You know, it's much like, you know, Friedland saying, you know, talking of Kamoa grades up at the expense of things like Escondida. But let's remember, Escondida is still the world's largest copper producer, okay? It's a disseminated copper system versus an underground high-grade copper system. And in the silver world, very similar.
Okay, so there's more to it than just simply grade. There's a lot of other factors can affect the economics. Got it. Okay, but one of the kind of ongoing conversations, and kind of going over a little bit old ground for people new to this story, we'll kind of get into some more relevant questions in a second. So one of the other big problems that we constantly talk about is the California, San Bernardino County, and their liking for mining in their backyard. I mean, where are you with that?
Well, look, let me take a step back and let me remind everybody that less than 2 years ago, we secured the Waterloo asset, okay? And at the same time, the neighboring Langtry property in San Bernardino County, California. 18 months later, we put out a resource and that have converted about 85% of that inferred resource into measured and indicated. We got our drill permits in 6 weeks, okay? I don't know any other story that has been able to move as fast as we have in any jurisdiction in the world, okay? So I think fundamentally people need to understand that. Now, what makes us able to work in California where maybe others are still struggling in California? And there's two things. You mentioned one. We're in the right county, San Bernardino County. To remind everybody, produces the vast majority of construction materials, aggregate, limestone for concrete, for the Southern California construction industry, which I think you and I both know is reasonably large. Okay. Second thing I think that's important for all of us to, or for everybody to recognize, is the mineral title type people have, okay? At Waterloo, where we've declared that resource on Monday, we're on fee simple lands. I'm the landowner. They're private lands. Okay, that resource is wholly contained on private lands. What that means is that I tend to go to the county of San Bernardino for my permits. So I'm dealing with people who understand the importance of resource development to their economic well-being and to their future, versus other groups that are dealing with Washington and the Bureau of Land Management and the BLM and having different types of conversations. Okay, so those things really do allow us to, I think, kind of hit firmly on the head the notion that you can't get things done in California.
Okay, and I get, like, I'm not going to labor that point because we've talked about it in previous interviews. I get the degree of confidence or comfort that you're getting from conversations locally on the ground, and not to sort of generalize about California more broadly. Okay, one other factor before I kind of get into what I want to speak about, which is obviously around the metallurgical testing with regards to recovery rates. So again, has that moved on? Has that advanced?
Yeah, look, we put some news out about 10 days ago ahead of this resource, and we've only got our partial met results back. I'm a bit disappointed. We did make some commitments to the market that we'd get those results out in totality early in the piece. Unfortunately, circumstances at the lab precluded us from doing that. But what I wanted to make sure that we were able to do was use the data that we had in this upgraded resource estimate, because we were able to fine tune from our previous resource estimate, what those recoveries were looking like. And the preliminary recoveries and the number that we've used in this update is 65% recovery. And, in the silver space, that is not a terrible outcome. We've got some more work to do. We're waiting for some additional results, and we'll get on with a phase 2 and see if we can fine tune that so that we know in advance moving forward, what we're looking at from an engineering perspective, because that's obviously going to feed into a conversation around what are we permitting.
Okay, great. So phase 2, you'll look to improve on the 65%. We'll move. You'll let us know when you know. Okay, all good. All part of the process. And talking of process, what I'm interested in here is, if I look at your share chart for last year, I guess, like every other precious metal company, it wasn't pretty, right? Precious metal's not getting a whole lot of love for the last 18 months. In fact, the conversations coming out of Miami would suggest that, a lot of precious metal companies feel a little bit slighted. People are kind of looking at all those new shiny objects in battery metals, right? But you didn't change your strategy. You said, we are going to get on with this. We are going to spend money. We're not going to hunker down. What did you do last year that is going to allow success this year?
I think, Matt, as you said, we focused on our strategy. We controlled the things that we could control. We have really moved forward and are putting the plans in place to continue to move forward. So what we're doing is really setting the stage for a number of different audiences. First, from an investor perspective, we're now probably, if you look at peer groups and if you look at us on a contained silver basis, trading at far lower multiples than any other of our silver colleagues. From a strategics perspective, they may have heard about Waterloo. The guys at Coeur, the guys at Hecla, 110 million ounces of silver. I can promise you, having spent time in a major company, the phone rang to the exploration and development group downstairs and said, "What do you guys know about this? You guys need to look into this, because we can't this is our backyard. You can't let this thing advance beyond where we may want to try and get involved." So that's, by moving it forward, we're setting that stage for some of those strategics to come in. And then, from the institutional perspective, the feedback I constantly get from the big end of town that is involved in our story is, patience, Tom. We like what you're doing. You're doing what you said you would do, which you and I sounds like an easy thing to do. But it's amazing how many people, struggle for whatever reason to be able to get that done. So I think from those three groups, there's something for everybody in Apollo and in what we're doing.
Right. So the strategics obviously keeping an eye on you because you're demonstrating the size. You've explained the kind of on the economic side, the theory around that. Institutional guys, you've got a lot of those on board already. For retail though, just again, if we can finish off with this, retail looking at this, we've touched upon a few topics there which kind of matter when you know how to build companies, when you're trying to build something which will get into production rather than just building for the sake of driving share price and mining the market. What's going to be important for 2023 for you guys? I mean, do you need to get some economics on more economics on this thing, get a truly better understanding of what the potential of this thing can be, so that we understand whether it's going to be good or whether it's going to be marginal or whether it's going to be great?
Look, again, if you look at it from different groups' perspectives, and look, you'll use the Lassonde curve, okay, as a guide, and getting more information sort of is going to move it into that second part of the curve where the institutions love it. All right. Very patient shareholders love it because obviously you're continuing to reduce risk and advance forward. For retail, sometimes for those guys, they're less happy with that. So, I mean, for us, the things that we're going to be doing to sort of address that part of our market, a couple things. There's still growth opportunities that we'll be pursuing at Calico, and I think the gold story, we haven't really touched on that, Matt. And we did include 70,000 ounces, which is not a ton of gold, in this latest resource update. But there's huge potential to expand that, and I think that from a retail perspective, people will find that of some interest, and there'll be some news flow focused for them. The other thing I think retail needs to keep their eyes on for us from 2023, as you point out, precious metals are not the flavor of the flavor of the year, I guess we could say. And we're not the only group that has that type of chart. There's some very good stories out there that are suffering from the same sort of melee in the market that we are. It doesn't mean it's a bad story. And there's opportunity out there. And, I've said this before, capital markets do support what we're doing. And I think the markets should look for us to expand our portfolio with some new assets that will, potentially be a little bit earlier, maybe in that Lassonde curve. But the right asset. I'm not going to dilute the value we've created by getting the wrong assets in the house.
That's interesting. That's interesting. Well, I guess, like you say, you'll tell us more when you know more. But that would be kind of interesting in terms of building out the portfolio component. I'm kind of, but I come back to the thing. I am interested in trying to understand how this company continues to move forward. You did it last year, kind of against the trend, which was let's change our strategy. Let's reimagine what we can be doing. Let's do things which hopefully will engender some sort of reaction from the market. And I don't think anyone succeeded in that, quite frankly. So for 2023, sounds like you know where you're going, but it's a case of, will you get the reaction that you want? And at some point, do you say, well, actually, enough is enough. Maybe this is too long. Or do you feel that you're going to be able to access the capital that you need to keep advancing the story through to, some kind of, I don't know, some sort of value creation moment?
Well, with all due respect, Matt, converting inferred into 110 million ounces of measured and indicated is a reasonable start to value creation. Getting the market to sort of recognize that. Look, in this kind of market, it's going to take some time. I wasn't surprised by the reaction. The Fed definitely didn't help yesterday, but look at, again, can't control timing. I always say I will control what I can control. Fundamentally, we are creating value. What I now need to do is make sure that as much as possible, I'm getting as many eyes to see what we're doing, because the value will be recognized. Good stories are going to get recognized moving forward. When the markets turn, they turn fast.
Well, but this is my point. this is my point, Tom. I got to interrupt you here because this is the point. What we've identified, we do diverse analysis, like the analyst notes, etc. And if I'm looking at the kind of leverage stories that you talk about the sun curve, the leverage you kind of get at the beginning of an exploration phase where you're drilling, you're getting some good results, you keep drilling, keep getting good results, and the share price does tend to rocket. From the developer's perspective, once you've kind of come, that period has come off and you get that dip again and you're looking towards that kind of leverage again, it's not as quite as meteoric as the exploration or not as dynamic, or it hasn't got the sex and sizzle of the exploration space. Well, traditionally it hadn't, but I'm looking at a lot of development stories like yourselves who've come off so much that and de-risked the projects significantly that kind of exploration leverage can be seen in a lot of these development plays. I'm looking at you guys. I mean, crikey, $40 million is crazy for what you've just announced, right? So the kind of where it can go and the big step change is possible. But for you guys, if you all say the same thing, it's really difficult for people to understand who the winner's going to be. Oh, we're a good story. We're a good story. What you need to do is help investors to understand why this thing will genuinely be an asset which will get into production, which will advance, if not by you guys, by somebody, right? I don't know what your plans are. And if you can do that, that's a point of differentiation for you guys. So is that something that you feel you can confidently, honestly deliver into market?
Look, I think so, Matt. Again, let's take a step back a little bit. Let's take a step up and take a step back. And as I said in there, as we all know, the administration in Washington has made a very, very firm commitment to decarbonization of their economy. Okay, silver right now isn't a critical mineral from that perspective. However, there's a lot of things that go into that. It doesn't mean that the U.S. is awash in silver. What it means that it's been reasonably comfortable that it has secure supplies of silver from places like Mexico and Peru. Well, I wonder how secure those supplies are feeling right now, okay? Silver is going to play an important role in that decarbonization. And as the U.S. continues to onshore their supply chain stuff, having an onshore support of what they will know is ethically sourced silver is going to be more and more important. To not just the I think the ambitions of the administration, but to the ambitions of those companies that are involved in that. You're seeing Tesla go way upstream and start to look at, Elon Musk getting into lithium mining, Elon Musk securing supply at the mine gate for nickel. Okay, the solar panel manufacturers for a number of years and continue to. They don't know what goes into the production of those solar panels. All they know, they buy them from China. They don't know where the silver comes from. They don't know. It's all good. Attitudes are changing. All right. Everybody has to be much, much more aware of the inputs to their process, their product. And I think, think of this, Matt. It's elegant. A large source of silver, which is going to enable solar, located in a state that has made a firm commitment to move to solar. All right. Greenhouse gas emission per ounce silver produced. I could be the first purely electric silver mine in the world. And wouldn't Gary Newsom, Governor Newsom, love that?
He would. He would. He would. Well, look, on that bombshell. No, sorry. On that note, let's leave it there because I know you've got pressing matters and you've got a big long list of people looking to speak to you today. So, thanks for your time. Let's catch up soon. We've had a lot of requests for people to kind of who want to understand the California thing a little bit more, and perhaps I think we talked a little bit before the show. You're going to maybe give us a little bit more exposure to what's actually happening on the ground, the sorts of conversations and the sorts of groups that are involved with that. So maybe you can put this California component to bed for a lot of investors.
Yeah, I think I can do that. And I think some of the folks that I've got on my board that have got deep experience in that space. So I think, we can definitely address, I think, specifically that California development, mineral development perspective.